Warren Buffett is stepping down as CEO of Berkshire Hathaway, closing the book on one of the most iconic investing careers of all time. But that's not the only major headline this week. From rising bearish signals and a Fed rate decision that could shake markets to key economic data, earnings reports, and the latest twist in the US-China trade war, there's a lot to digest right now. We're breaking it all down so you can stay ahead. Don't forget to like and subscribe and follow wherever you get your podcasts. Now, let's get into it. Welcome back to Stonkcast, the market show for the average Joe. Whether you're a diamond-handed degenerate looking for the next 500% play, or a more conservative swing trader or investor, we've got you covered. We tackle the latest market news, give our 2 cents, and maybe, just maybe, help you make some money along the way. I'm your host, as always, Brandon Shar. Happy Sunday. May the 4th be with you. Folks, we have a lot to unpack. Let's jump right into it. Warren Buffett, one of the most iconic investors of all time, made a pretty shocking announcement yesterday. Well, maybe not too shocking to some people, I would assume like his children, but to everyone else, pretty shocking. According to CNBC, end of an era, Warren Buffett will ask Berkshire board to replace him as CEO with Greg Abel. An end of an era was announced in Omaha Saturday as Warren Buffett said he will soon ask the board of Berkshire Hathaway to have Greg Abel replace him as CEO at year end. While Buffett is 94 and Abel was designated a CEO successor in 2021, it nonetheless came as a surprise to the thousands of admiring shareholders gathered for this year's annual meeting to once again hear the investing legend opine on the future of the company. Pretty shocking news. It's kind of turning the page, so to speak, for Berkshire Hathaway as Warren Buffett, one of the greatest investors of all time, is officially stepping down. This is something that I think the company and a lot of people paying close attention knew would obviously come eventually. I believe Warren Buffett's 94 right now. But it was interesting because I actually caught some of the shareholder meeting yesterday, and he just kind of tossed it in at the end. As he was saying it, he was saying there's some people that he hadn't even told yet, and this was the first time that they were hearing about it. So it was a really cool experience to see. And then, of course, everyone who was there gave him like a 10-minute standing ovation. Well deserved for a man who has done so much over his long career. So the interesting thing, though, is that, he does plan to kind of stick around. But first, a little bit about Berkshire Hathaway. In 1965, Buffett bought what was then a failing New England textile mill, and over 6 decades transformed the company into a one-of-a-kind conglomerate with businesses ranging from Geico Insurance to BNSF Railway. Buffett is handing over his reins on a high note as Berkshire shares just reached a new peak, giving the conglomerate a market cap of nearly $1.2 trillion, folks, with a T. The Oracle of Omaha said he will still, quote, hang around to help, but the final word on company operations and capital deployment will be with Abel, currently the vice chairman of non-insurance operations for Berkshire. So, definitely an interesting development. And, Buffett is still going to be around. So, from an operational standpoint, he'll basically be on the sidelines for any, notable developments, anything major, that, Abel may need help with. And also keep in mind, Buffett owns more than 160 billion in Berkshire stock. He is the largest shareholder and said that basically he wouldn't sell a single share of the stock after he transitions to his new phase. So that was some reassurance for Berkshire investors. And he's basically doing it because it's an economic decision. He thinks that the prospects of Berkshire will be better under Greg's management than mine, is what he said. Buffett, for those who know him, he's a bit self-deprecating even after his 10-minute standing ovation. He kind of joked that it was because he was leaving that he got that. So he's a bit self-deprecating to a certain degree, but, nonetheless, he is, it's a historic moment, really, to see him kind of take a step back here. So that's the latest on Warren Buffett. That came out yesterday. While the investing world reflects on a legend's exit, the market last week was writing its own story. Let's do a quick market check-in on what was really just a wild week on Wall Street. Taking a look at the heat map for those on YouTube from Friday. Ton of green, with the odd exception of Apple, potentially related to tariff news, things like that. But Apple unfortunately couldn't join the green party here, but as you can see, everything else on Friday was green. Massive move for the market, and something that is very notable. We have officially recovered all of our Liberation Day losses, folks, from basically the moment that news dropped from President Trump back after the bell on April 2nd. As you can see, we have now recovered all of that. If you're looking at the ETF SPY, which tracks the SPX, basically we were right around 564 right before that news dropped on April 2nd from President Trump on the tariffs, and we closed Friday at 566.76, and we actually saw a high of 568.38. So pretty impressive in my opinion. As I've said before, the market is definitely showing some resilience, and we have definitely been able to recoup those losses, which is really impressive. I've heard some people say for a while now that they think that the bottom's in, and really all we've seen over the past I guess almost the past month now, volatility was pretty intense initially after April 2nd, but it's died off. I mean, the VIX is sitting at 22.68 right now, and we continue to get higher lows, which is a great thing. So, but this calm might be hiding some deeper cracks beneath the surface. So not everybody right now is as bullish on the stock market. According to Yahoo Finance, U.S. stocks are in for another drop that will eventually lead to a bear market in the coming months, according to veteran technical strategist Tom DeMark, who accurately called this year's top in February and subsequent April low. So DeMark has been on the mark as far as some of his, I guess, speculation where the market's going to go. DeMark, a closely followed analyst who's advised billionaire investors, including Paul Tudor Jones, Leon Cooperman, and Steve Cohen, uses a system for predicting where markets will move, divined from a half century of chart gazing that's based on mathematical relationships. He focuses on trend exhaustion, with his mantra being markets top on good news and bottom on bad news. So basically, according to him, there's a confluence of technical indicators right now, sentiment shifts and cyclical timing models that are flashing for him caution signs suggesting we could see a drop in the S&P 500 below the 48.35 mark, which would be this year's intraday low in early April. That would, if it did happen, represent a more than 20% drop from the February peak, pushing the index into a technical bear market. I don't think anybody wants to see that, but that's what he's suggesting. He said, quote, "A top is imminent. Too much technical damage has been done. Stocks are vulnerable right now and can easily get hit pretty badly if anything quickly changes on the global trade outlook." So he is very much so bearish on basically where we're sitting at right now. So he's thinking that we're going to roll over essentially. I mean, if you look at SPY right now, we are coming up to the 200-day moving average. We're not out of the woods yet. We definitely have some areas that we're looking to get above 200-day moving average at 573. And then, you have this level here just above it, 575. As you can, for those on YouTube, basically, if you look back into January, we had some support here right around 575, and then support became resistance in late March. So we're coming up to that level of 575, which is going to be very, very important to see if we can get above it or not. But according to him, to Mark, that is, he is suggesting a very high probability that we are just going to essentially roll over, crack the low that we had in April, 481.80 on SPY, the ETF, and essentially continue into what would be classified as a bearish market. So not a rosy picture, not one that I want to see or anybody with a 401k wants to see, but that's where DeMark stands, and for what it's worth, he is pretty credible. He's called some recent highs and lows. He's definitely mentored. Maybe mentor is the wrong word, but he's advised some pretty notable investors. So definitely worth an article in Yahoo Finance. I'll give it that. But I'm hoping that he's wrong, and that we can actually clear out of this, and this will look, sort of similar to the COVID recovery, I guess. So, with bearish sentiment rising, all eyes are now on the Fed this week. Folks, the Federal Reserve is making their rate decision this week. It's going to be a jam-packed week, and everyone is very anxious to see what Daddy Powell, Jerome Powell, chairman of the Fed, what he is going to say on Wednesday. According to this article by Reuters, Wall Street week ahead, Fed outlook in focus as U.S. stocks rally picks up steam. The Federal Reserve meeting in the coming week is set to test the U.S. stock market's sharp rebound, with investors hoping the central bank is poised to resume lowering interest rates in the months ahead. During the rally, stocks have erased the slump set off by President Donald Trump's sweeping tariffs. After gaining on Friday, the S&P 500 was up 0.3% since April 2nd, when Trump Liberation Day tariffs were announced, sent stocks plummeting, and led to some of the market's most volatile swings in 50 years. So while the Fed is widely projected to hold borrowing costs steady in its monetary policy statement on Wednesday, market pricing indicates expectations that the central bank could cut as soon as June, although odds of such a move dimmed following Friday's solid U.S. jobs report. So, Friday, we had a couple things Friday that really, I guess you could say, pushed us up. On Friday, we had the jobs numbers that came out. They were very strong. And we also had some new, I guess, China-U.S. trade news, which I'll get to here in a minute. But basically, from the standpoint of the Fed, from the standpoint of Jerome Powell, if the job numbers look strong, he's not as inclined, nor is the Fed at large, to start cutting rates because, they're not seeing the necessary cracks, I guess, in the economy that would lead them to, start cutting rates. So I would say there's a 99.99% chance that we don't get a rate cut in May. As far as June, I think a lot of investors and traders, those active in the markets, were anticipating prior to Friday a pretty strong possibility of a rate cut in June or July, heavier on June. And after Friday's strong data, now I think a lot of people are not feeling as confident about that June cut and maybe shifting it out to July. Obviously, the market, President Trump wants that rate cut now. He wanted it yesterday. So it'll be curious to see where Jerome Powell stands when he, gives his prepared remarks this week. And obviously with the Fed rate decision, again, not getting anything this month. I would bank my entire 401k that we don't get any change this month. As far as June, right? That's really what I think a lot of people want to hear out of Jerome Powell. Hey, how do you feel about this rate cut for June? So that is this week. Like I said, it's a jam-packed week, and really Jerome Powell, I think, is basically the market right now. I feel like is in a pressure cooker because we're at this point, technically speaking, where we're coming up to resistance. Are we going to clearly break above it? Are the bulls going to continue this historic run we've been on since those April lows? Jerome Powell is positioned in an interesting way this week on the timeline with where the charts are at, where, depending upon what he says, he could add fuel to the fire on the bull side, or he could abruptly stop this brief recovery, and we could simply roll over as DeMark thinks that we're going to do. And that's not to mention anything that we could get this week as far as tariff news. A lot going on for sure. And it's not just the Fed. There's a wave of economic data investors need to be watching. So I want to quickly cover here some key economic data to watch for the week ahead. According to Bloomberg, let's take a look here. And it looks like I lost my filters. Give me 1 second. Obviously, we know that we're getting the Fed rate decision, right? That's a big one for sure. Some other things to take note of. Services PMI comes out tomorrow. We also get the ISM non-manufacturing PMI. That will be coming out as well. And, basically when you're looking at non-manufacturing PMI, a reading above 50% indicates the non-manufacturing sector economy is generally expanding. Below 50% indicates the non-manufacturing sector is generally contracting. Given the large proportion of the U.S. economy engaged in the services sector, this report offers insight into the health of the overall U.S. economy. Basically, a reading that's stronger than forecast is generally supportive or bullish for the U.S. dollar, while weaker than forecast reading is generally negative for the U.S. dollar. So, according to Bloomberg, this is one of the more volatile readings that we can get. So, again, services PMI, ISM non-manufacturing PMI, those both come out tomorrow, Monday, May 5th. Tuesday, May 6th, you got a 10-year note auction, some other things in here, but I'm really just focusing on what Bloomberg would, I guess, classify as the more volatile, high volatility expected economic events, right? Wednesday, as we already discussed, we get the FOMC statement coming out at 2 p.m., Fed interest rate decision, and then the FOMC press conference, which is really what everyone's going to be looking for. That comes at 2:30. And as you can see here, for those on YouTube, basically the Fed interest rate decision is not expected to change at all. We're sitting at 4.5, and it's expected to stay that way. Earlier in the day on Wednesday, however, we do get crude oil inventories at 10:30. This is also classified as a high volatility event, so something to be mindful of. On Thursday, initial jobless claims, as if we didn't have enough, right? Initial jobless claims at 8:30 coming out, previous of 241, expected 232,000. So initial jobless claims are expected to taper off a bit, so that's a good sign for the economy. You got a 30-year bond auction coming out at 1 p.m. on Thursday, May 8th, and then taking a look at Friday, May 9th to wrap up the week. You got some various things going on. You got a couple Fed speakers and FOMC member Williams speaking, and as far as high volatility events, though, not a ton there, although I will say that it is worthwhile to look at the various, there are websites that do this too, but the various Fed individuals that speak, right? Some of them more so than others tend to move markets. I think a good example of that is Daly, however you pronounce his name. Basically, that's someone when they give their comments can tend to move markets. To be honest, I don't really know if Goolsbee speaking is going to move the markets a ton, or like Fed Waller, according to Bloomberg, is a bit more volatile speaking than Goolsby, right? So there's an example of what I'm talking about. So that is the economic calendar for the week ahead, folks. We have a ton going on. So you definitely need to stay sharp, stay vigilant this week. At the same time, earnings season rolls on, and a few key reports could set the tone. So want to cover with you real quick what kind of earnings we are looking at for the week ahead. Definitely not a quiet week on Wall Street, folks. Here's a quick look from Earnings Whispers for those on YouTube. Basically, Monday after the close, we got Palantir, which has kind of been on a tear over the past month or so. I will be keeping eyes on that. Some other notable earnings coming out. Celsius before the bell on Tuesday. And you got AMD after the close, Rivian, what else? Lucid. Wednesday before the bell, you got Uber, you got Disney, some big names in here. So these are all the earnings coming out this week. I am curious to see, basically I want to see what Palantir looks like. That's really the only one I'll be paying super close attention to. Over the past couple of weeks, we've gotten, bank earnings, things like that. So definitely more, I would say, this week on the consumer discretionary side of things, but still important. I want to see really overall for all these companies, right? Are they withdrawing guidance? Are they, giving guidance? Those are things that I want to see. Obviously, we talked about how Meta did not pull their guidance, right? And so I want to see if some other companies follow suit, or if it's more based upon, sector, industry, right? So that's your earnings watch for the week ahead. And finally, just as markets juggle all this, geopolitics back on the radar. So I kind of hinted at it earlier, but the China-US trade war continues on. And let's take a quick look here at what is happening now in that. So last week on Thursday, basically there was a leak that came out that sent the futures markets and after hours going nuts. Basically what happened, China said door is open to trade talks with the US, right? That was the headline that got everyone's attention. I mean, if you think about it, over the past couple of weeks, we really haven't gotten anything at all on where China and the US were at. So this was obviously something that people hopped on immediately, just taking a look at the headline itself. But digging into it a bit deeper here, China has said it's evaluating approaches from US officials to start negotiations about tariffs, a potential de-escalation in the trade war that has raised hopes formal trade talks could start soon. According to China's Commerce Ministry, quote, if we fight, we will fight to the end. If we talk, the door is open. The tariff war and trade war were unilaterally initiated by the United States. If the United States wants to talk, it should show its sincerity and be prepared to correct its wrong practices and cancel the unilateral tariffs. So that's, if you actually dug into the article, at face value it says China wants to talk. But if you actually read it, right, according at least here to Yahoo Finance, China's basically saying, yeah, we can talk, but you need to drop tariffs, right? So not as rosy, I guess, as what the clickbait title of the article would suggest. So China has reportedly compiled a list of U.S. goods exempt from its 125% tariffs, aiming to ease trade tensions without making public concessions. We've talked about that before. But basically, that's where we're at right now, and really no new news, I guess, over the weekend as it relates to China and the U.S. Again, this article about China saying the door is open to trade talks came out Thursday evening, I believe. So we'll see what the week ahead looks like there. And as far as, Trump responding, I guess, to China Commerce Ministry saying, hey, drop those tariffs, found this article from Fox News. Trump says he will not drop tariffs to get China to negotiating table. So that is not promising if that is the main condition for China to come to the table. But President Donald Trump said he will not drop tariffs on China to get Beijing to come to the negotiating table. He had an interview with Meet the Press from his Mar-a-Lago estate. And just to cover some of the items here, this is a quote, right? They said today they want to talk. Look, China, and I don't like this. I'm not happy about this. China's getting killed right now, Trump told host Kristen Welker. They're getting absolutely destroyed. Their factories are closing. Their unemployment is going through the roof. I'm not looking to do that to China now. At the same time, I'm not looking to have China make hundreds of billions of dollars and build more ships and more army tanks and more airplanes. And so Welker basically asked him, you're not dropping the tariffs against China to get them to the negotiating table? And Trump responded flatly, no. He said, at some point, I'm going to lower them because otherwise you could never do business with them. And they want to do business very much like their economy is really doing badly. Their economy is collapsing. So, that's kind of where we're at right now. So Trump did say, for what it's worth, that eventually he does plan to lower it. But here's the thing. From my perspective, look, I'm not an economist. I'm not going to pretend to be one. But we are going to start to feel the waves, I guess, and the consequences of these tariffs, and we're going to feel it first and foremost at the ports, right? The number of shipments coming into the U.S. are going to start to drop off dramatically. We're going to start to see shortages, supply chain issues, things like that. So yes, while it may be true that China's hurting, we are also hurting, and at this point, we just need both of them to come to the table. Just begin to have the conversations, right? So I'm hoping this week ahead that we get, something going on here. If you recall, I did say probably about a week and a half ago, I bet within the next couple weeks, China and the U.S. are going to start talking. And so I'm not going to count my prediction as a win just yet, but I will say that a headline saying that China is open to negotiations is the beginnings of that. And I wouldn't be surprised if we get more news on this whole China-U.S. trade war, before the end of the week. So that's what I got for you. It's a jam-packed week ahead. It's definitely not a dull week in the market. You definitely want to stay sharp. Let's see what the Fed can do. Make sure to drop a comment. Let me know your thoughts on where we stand with the China-U.S. trade war, what you think Jerome Powell's going to say this week as it relates to his views on inflation and whether or not he should cut rates. And thanks as always for tuning in. We are creeping up to 100 subscribers, which, considering I started this channel at the end of January, is a pretty big deal. So thankful for the support. Make sure to like and subscribe and follow wherever you listen to us as it relates to podcasts. I will be back on Wednesday for a midweek check-in and a pretty jam-packed check-in, because that'll be right after we get Jerome Powell, Daddy Powell, giving his Fed rate decision right smack dab in the middle of the week. So looking forward to that. Stay sharp, stay vigilant, and as always, folks, remember, plan the trade and trade the plan. Have a good night.